So, hello everyone. Today we are starting the first edition of our deep dive biocapital webinar series. The goal of this webinar series is basically increasing the know-how and exchanging knowledge between the consortium partners, and in this case we are presenting the insurance mechanisms which aims to preserve and protect biodiversity. Today I'm going to present those like insurance mechanisms. So we will have a brief intro about what is insurance, what's its role in the biocapital project, and thereafter we will have a deep dive on its mechanisms, its real-world examples, and how it can be integrated with our biocapital use cases as well. As you can see from the outline, we will have a brief intro, then we will go on to core content, but we will have a separate Q&A session because it will be an information-heavy session, so bear with me in this case. You will see some terms, financial terms, which you may not be familiar with. So for your questions, I will give brief pauses at some slides. So don't take it as something is wrong. I will just give you some consideration time and write your questions as well, so we can answer all of them in the Q&A session. So what we will cover today, first of all, we will go on is what is parametric insurance and how does it work? And second of all, how this insurance mechanisms can support biodiversity and ecosystem service markets. And then we will have a deep dive on real-world examples and potential application scenarios. And lastly, we will actually have a brief discussion about its integration potential and feasibility with payment for ecosystem services, triple capital accounting, blended finance, and other mechanisms, which are, as you know, the other tasks of work package 4, and we will work in the upcoming months with this other financial mechanisms to integrate with insurance and apply on use cases. Before we start, I would just like to have a brief intro about our firm and how we are connected with the project. So as a firm, we are a technology firm located in Netherlands, headquartered, and we have an office in Turkey. And we basically aim to make the agriculture sustainable, resilient to climate change, and investable. And our working areas can be categorized under 3 pillars, and in the specific order is basically digitizing the agri-food supply chain, enabling the traceability and accountability in contract farming, and lastly, enabling climate resilience via parametric insurance mechanisms. So these 3 areas are actually interconnected with each other, and actually you will see the reasoning behind that in the upcoming slides as well. So, why insurance and why now? As you know, global biodiversity finance gap is estimated in hundreds of billions of euros, and we already had lots of literature research on that. Our project also shows that clearly that there's a significant financial gap, and climate volatility and degradation increase these risks, and basically threatens the livelihoods depending on them as well. And insurance in this case, when well designed, which is, I want to underline this part, when well designed, don't just transfer risk, but actually it can incentivize the resilience, early action, and better management. But the thing is, traditional insurance mechanisms, which is called also as indemnity insurance, doesn't work well in nature-related contexts. But parametric insurance can be a very helpful tool in this context. So there are right now 2 terms in there, traditional indemnity insurance versus parametric index insurance. I will come to their differences and actually definitions as well as in the next slide, like after the next slide. But bear with me for a few moments, because I want to touch on a point of what is the purpose of insurance in this biodiversity context. First of all, it can be a tool to encourage the stakeholders or beneficiaries, they can be the same people, to adapt or maintain practices to protect and restore biodiversity. In this first case, you actively incentivize the biodiversity-friendly actions. You can see some of the examples on the slide. But on the second purpose, it doesn't directly incentivizing the biodiversity friendly actions, but rather it stabilizes the consequences of those biodiversity friendly actions. So in this case, actually, they are serving the financial sustainability of the beneficiaries, but it also, in a way, stabilizes the nature positive investments. You can see some of the examples again in the slides. One of the examples is such as transitioning to regenerative agriculture. In this case, the crops can be more fragile for specific perils, and insurance works as a safety net in this case. So we are coming to the difference between traditional and parametric insurance. So I will make a brief description in here about this both insurance mechanisms. Sorry. Yeah. So traditional insurance is basically makes a payment after an event occurs. So think it like an car insurance. In a car insurance or automobile insurance, you have an accident, then there's a damage occurring, there's an obvious damage, then loss assessor, insurance guy, you can say it, comes to there and assesses the loss, checks whatever it is in the scope of the policy or not, then you get a payment or not, or you get only partial reimbursement or full reimbursement. But in the case of parametric insurance, actually, you define an objective criteria for the insurance for an event, and if that parameter, or as they call it, trigger, is reached, then you get a payment. Then in this case, we can have an example of an earthquake. Think about an earthquake. It has a certain magnitude scale, as you see on the news all around the world. Such as if it's reached to I'm going with the earthquake example, 7, as you may hear, or 6, and it is measured by the ground stations. It's an objective thing, so it's not subjective, like it's not depending on a subjective assessment. If it reaches that scale in a certain area, any insured person will get a payment. So there's no loss assessment. There's no loss assessment. Somebody's coming, checking the building in that case. If that criteria is reached, then you get a payment. Other examples can be such as a rainfall. You determine an area and you determine a specific time period. And if it is measured that like a specific rainfall amount is reached, then you get a payment for, let's say, excessive rainfall, which is very useful in certain agricultural and nature contexts. Or you get the measurement of wind speed by ground stations, and then again you get a payment. So in these cases, you don't directly make a loss adjustment, you rather determine a parameter and you observe that parameter to decide whether you will make a payment or not. And this insurance type is actually very useful because it quickens the speed of payout, which is very crucial, especially in disaster scenarios. And it also increases the trust because it is an objective and measurable criteria. And there's also important context in here: suitability for ecosystem services and support for proactive behavior. The thing is, in here, in suitability for ecosystem services, in parametric case, you can link those parameters to the ecosystem indicators. But in a traditional insurance, they just check whatever the losses happens or not. So it is not really a good fit for what we are trying to do, basically incentivize the biodiversity-friendly behaviors. And the other thing is like support for proactive behavior. Since again, it is correlated with the biodiversity practices. If those practices are adapted, it can reflect the risk premium. So basically the cost of insurance itself. And so basically anyone who makes investments or adapts to biodiversity-friendly practices or nature-based solutions can pay lower insurance premiums for protecting their investments. So you can see again a simplified version of like what I have told as well. In this case, you define a trigger. The trigger is basically the parameter itself, a level of parameter, which is which decides whether you will get a payment or not. As you can see here, such as rainfall below 100 millimeter in the last 30 days. It can be a parameter for drought insurance, such as, or in the case of earthquake, you can see if it's an above and certain magnitude scale. And then you set up a payment structure if that trigger is met. And it can be step by step, so it shouldn't be a single payout structure as well. So that you can determine certain thresholds, and you can make you can structure a payment according to that. And in this case, you use an independent data source. These are some of the examples, but as you can see, they are objective criteria. And the end goal is basically speeding up the payout process and like increasing the trust between the insured people and insurers. So basically increasing the alignment between the supply side, which are the reinsurance and insurance companies, and the demand side, which are the beneficiaries in this case. So key steps for designing the biodiversity insurance product. In this case, we have 5 steps. I will not read every one of them, like single one of them, but I will just have a brief summary on like how it should be designed, because actually this will be also related with our project activities, already related, but also in the upcoming months as well. First thing is like basically assessing the natural assets and their value, which actually is aligned with our use case descriptions as well. In this case, you define the ecosystems, quantify as much as possible, determine their ownership structures, which is important because it eventually will help us to determine who owns or benefits the biodiversity ecosystem services and who pays for it. Second of all is stakeholder engagement, which is related with step 1 as well. So basically you match the actors on the field with the ecosystem inventory and services. And the third thing is reviewing the legal and regulatory frameworks to understand the compliance of available and potential insurance mechanisms. Fourth of it is that like secure sustainable premium financing. It means that insurances are basically covered by premiums paid by the policyholders. But as you may know, especially in nature-related contexts, the premiums itself might not be sufficient to cover the cost of the insurance payouts. In that case, you have to be creative, and you should use innovative financial tools such as blended finance, which is basically combining the philanthropy or public funds with the private investments. And you should set up the right governance mechanisms to ensure the trust between the investors for biodiversity investments and the beneficiaries of those investments. And last step is basically designing the insurance product itself. In this case, you define the perils, coverage scope, so the exact land area is gonna apply or partial. Select parametric triggers. It can be rainfall, wind speed, NDVI, basically normalized difference vegetation index. It shows the vegetation in a certain field applied in grassland, such as, and identifying the reliable data sources for those triggers and perils is the next step. And lastly, you go on to the pricing and the claim procedures. So until now, I have described what is the parametric insurance mechanisms and how it is designed and how it can be used in general context for biodiversity investments. So in our project, how does it fit? In our project, as you know, we focus on integrating different financial tools and incentivizing the adoption of biodiversity protection practices. In this scope, insurance can be a risk management tool, especially a risk transfer tool. In this example, you can see it can be complement payment for ecosystem services by de-risking conservation efforts. By de-risking, I mean some of the conservation efforts by its nature can threaten the financial stability or decrease the financial potential of the investments. But by using the insurance, you can cover those gaps. It supports triple capital accounting by quantifying environmental and impacts in financial terms. As you may know, triple capital accounting serves both the social, economic, and environmental capital. So it includes those. So with the right design, insurance can be integrated with this accounting method as well. The end goal in here is actually twofold, and it is again serving to the design choices I have mentioned before. So it can be a both proactive enabler for adopting biodiversity friendly actions, as well as a reactive protector for creating a safety net for investors. So we are coming now to some real world examples in here. As these examples are actually gathered from several sources. You will have an access to check those sources after the webinar as well. So I will go briefly on them and explain how they work. First one is like the coral reef insurance, which is adapted on Fiji. This insurance is basically triggered by wind speed and cyclone proximity. The goal is basically protecting the coral reefs against storms and cyclones. And it is developed by a foundation and also private firm. And it pays for reef restoration and local community recovery actions. This one is commercially available and actually renewed in 2024, an operational product, and it's one of its first kinds. And it's a good example of how ecosystems can be insured assets as well. Second example, this one is in Mexico, and it covers coastal mangroves against hurricane damage. This one is designed by a private insurance firm, AXA Climate, and a separate intermediary, Climate Seed, and it is again triggered by storm and wind speed, and payouts go directly to communities itself for replanting and restoration. This one is still at the pilot, early commercial stage. Some of payouts are made already, but it's still in an experimental stage. But this one is initiated by the community itself, so it's a good example of how community-led conservation and insurance can align in nature protection. The other one is in China. This one is actually, excuse me, this is a parametric solution which is designed to protect gross ecosystem product, which means basically the natural value, like a natural economic value of the ecosystem of a wetland park in China, and it covers several perils such as typhoons, floods, droughts, and wildfires, and it has separate triggers which helps on that, and it is developed in coordination with Swiss reinsurance firm, and actually is aligned with China's ecological accounting framework. Their ecological accounting framework is actually the thing we will also work on in triple capitalist accounting. Not directly working, but rather what they are doing in China is also aligned with our study in our project as well. And the last example is from Colombia. In this case, it is a parametric insurance and a pilot one, and it is designed for precipitation anomalies to reduce fire risk in Colombia's ecosystems. And it is actually implemented by WWF, UNDP, and some national actors, and it funds fire prevention. In this case, it's still an experimental product, but it gives a promising results. So it's a pilot which has to be keep an eye on. Yep, you can see on the screen like some of the actors, as I mentioned, for each insurance case. You can see there's a variety in here, so it is not only one type of insured institution, but there are several types, such as trusts, local communities itself, national park authorities, or the water fund, and the insurers are also varying, and there are certain intermediaries in this case, basically matching the supply and demand. You might think the intermediary role as like our role in this biocapital project, basically communicating and creating a bridge between supply and demand, and helping to design and develop the product. And some related horizon projects we have as well. As you may have seen in the previous slides, all of them were outside of Europe. In Europe, there are also parametric insurance schemes applied, but I would like to briefly touch on a couple of projects, horizon projects. First one is like a PISA project. It is a recent one, actually. As you can see, the dates, they are pretty much going together with us with biocapital project, and its goal is actually implementing innovative pilots to see how insurance mechanisms can mitigate the climate risks across Europe. You can see some of the schemes applied in this project. Some of them are applying in our use cases as well, such as this one and this one. And some of them are more related with the urban context, the first two. But this insurance project, is closely aligned with us, and you might find more information in these links, and we will also communicate with them in the upcoming days as well. The other projects then Naturance, and it's an 4-year project, and it's again examines the feasibility of like the disaster risk financing and how investments with nature-based solutions can mitigate those actions, how the insurance can support nature-based solutions. And integration with other financial mechanisms. This part is highly related with the work package 4 itself, because as you can see on the screen, most of these mechanisms are mentioned in the work package 4 as separate tasks, as well as reviewed and discussed in work package 2. In this case, you can see integration with other financial mechanisms starts with blended finance. With blended finance, there are multiple pilots and programs exist in the real world, and most significant one is like the payment for ecosystem services. You can see emerging pilots and conceptual frameworks, and also some real life examples how they are integrated. There are two cases which there's not a specific documented case yet, but this is also makes our project innovative, which are like the sustainable bond schemes and triple capital accounting, which we will actually observe during our project time and see how they can be combined and or can be offered to the real world scenarios. So in this part, actually, I will dedicate this section to the insurance profiling of use cases. This profiling is preliminary, so it is not the final version of it. It will take much longer than that. First of all, as you may remember from designing of insurance, we should have an active stakeholder consultation, engagement sessions, and thereafter we can determine on that. But the reason I have added this insurance profiling is basically create a discussion among us and create some ideation on your minds, like how it can work for our specific use cases. So, as you can see for the first case, such as in Alpine forest in Italy, Austria, the risks can be windstorms. And in this case, we basically measure the wind speeds, which are above for 100 kilometers per hour over 24 hours. So if this happens, then there will be payouts. But the thing is, since we aim to incentivize and enable the adoption of biodiversity friendly mechanisms, actual practices, we can put eligibility criteria for insurance itself. So whomever adapts these practices can get the insurance itself. So, and it can be used for various purposes, such as rapid debris clearing, basically clearing the forest to prevent beetle infestation, because it's also another risk which can happen on the forest itself. Or it can protect carbon credit streams from forestry projects. In this case, the trees fall down due to the wind, and it can threaten the income flow from a forestry, but in this case, they will get a payment for that windstorm. And it can be bundled with payment for ecosystems for high biodiversity zones itself. And it eventually creates a safety net for ecosystem service providers. Second one, on French case, it can be risk drought or excessive rainfall affecting crops. In this case, we can adapt two different, or actually we can combine them as well. In this case, it can be such as below 40 millimeter rainfall during a 30-day planting period, or inverse of it, excessive rainfall, and measuring that rainfall and then make a payment if that happens. But again, we can put eligibility criteria for incentivizing the adoption of regenerative agriculture. So we can observe cover cropping, no tillage, and such as adoption of integrated pest management. In this case, the payouts can be used as a protection for yield loss and maintain those commitments to regenerative agriculture, so farmers can stabilize their income. So because that's a common problem, such as with transitioning farmers, since there's a natural yield drop due to adapting those regenerative practices, especially in the first 3-4 years, and they have suspicions about whatever their crops will be resilient to certain perils, they are hesitant to adapt those practices. But in this case, the insurance can basically create a safety net for those farmers. In Romania case, it can be similar, like an frost or drought. So as you can see now, like similar with the other cases, there's a specific risk, then there's a trigger which is defined and it's a measurable one, and then you put an eligibility criteria which incentivizes the people who adapts biodiversity friendly practices. Then you actively use those funds to the continuation of those practices. So as you can see, there's a loop happening over there. Insurance is both working as an enabler as well as a safety net for the ones who already adapted those practices. Again, for Slovenia, it can be an flood, protection against flood, and again, it can be a criteria for rainfall, or basically checking the river gauge, basically increase of the river's level above a certain level, then you make the payment. And in this case, you can use those funds for covering restoration costs or lost biodiversity bonuses, and it can be linked to specific schemes as well. And for the UK case, it's similar with the Slovenia case. The peril in this case is floats again. So in this case, you basically measure the river gauge, how much it increased according to the previous levels, but it can be also measuring the rainfall itself if there's a direct correlation with it, which there is usually. Then you pay for replanting of the vegetation buffers, and those payments can be made to the water company or the trust itself, depending on who basically owns those investments. Then those investments can again use for restoring the ecosystem services which is damaged or destroyed due to the event that in this case flood, and that's how it can be used. So this is an overall picture of like how insurance can be adapted for promoting the nature-based solution, and like what is the biggest risk for the adoption of that nature-based solution, and how insurance can enable that action. Since there's some writing, I will have a brief pause in here. Okay. So I assume everybody had a look. We can return to the slides as well later on. But I would like to thank you for all of you to keeping your attention until now.